What's up everybody, it's Mike, and this is another question that came into me from Instagram. Someone was asking me about how to understand some of the basics of chart patterns, and so that's what I want to give to you today. And the main things that we're going to go over are that the market is telling us a story, and how can we profit from this story? So if you recall from the other video about some of the nuances of the price action, you have these bar charts, right? You have these bars, and each bar is telling us a story in itself, right? Like, so when you're closing at the top of the bar, that's a bullish bar, and you have a few of them in succession. Then over here, you have a bar, kind of an indecision bar. It closed in the middle of its range. Then over here, price starts to come in a little bit more, and you're getting this this bearish bar. And basically, if you just look at the bars, right, from this point, you're moving up this way, and then from here onward, you're moving sideways, right? So what does that do for us? Well, it does a few things for us, right? Like, number one, it's telling us that story. It's telling us that between this point and that point, there's a struggle between buyers and sellers. That whenever we get to this price level, prices being sold off, right? Well, whenever you get back over here, buyers are stepping in and they're starting to support that price level. So you have, well, what's commonly referred to over here as resistance, right? And down here, what is commonly referred to as support. So if you ever hear people talking about support and resistance, that's what they are referring to. And the reason why it's so important in trading is because if you are going to be a trend trader, which I am, or a breakout trader, which I also consider myself to be, then what you're going to do is basically wait for price to break out of this range or break down from this range, and that is going to trigger your entry point, right? So let's, for example, to continue going with this, let's say that price breaks out over here, right? Well, at first, when you're analyzing this, you would be looking at, well, I would want to enter if price breaks out of that, right? So you would have an order waiting for it to break out, maybe around right there, a little bit higher than where it was finding resistance before. And when price crossed right there, you would be getting in right there, and you would potentially be playing that trend continuation. But at the same time, you're not just going to buy there and hope for the best. What this is giving you is part of how you can structure a plan. So you would look at this and say, wow, price can break out from there, but if price can also come right back in, well, what would happen if price came right back in? And then you could start to develop what your trading plan is going to be. You have your entry. Where would your stop loss be? Where would you exit this trade if it were to turn out to be a loser? Well, when you have a sideways trend like this, the common spot to place your stop would be right below resistance, right? Because if price is moving out of here, it should not fall all the way back down and no longer get support down here. Price can come back in, but you would expect it to start to get support above this level over here. So the common place for you to place your stop loss would be below that level. Now there's more advanced techniques that you can do to try to find different levels of support. You could use bracketed support levels where you would have a portion of your trade, maybe you would exit a portion over here, maybe exit another portion down there, and have a third stop loss below support way down there. But that's getting into some of the more complexities of trading and some of the nuances, some of the advanced topics. But this is the basic idea of how you can identify a trend, understand the story that the market is trying to tell you that's happening between the buyers and the sellers, and how you can attempt to profit from it. Now, this is something that we go over in our deep dive sessions that we hold every single Saturday. We'll go through the entire interesting ideas list of stocks, and I don't just pick stocks out of a hat. There's strict criteria that stocks need to make in order for me to even consider them, and then we'll go through that list, that higher probability list, and then look for these kind of patterns. And that one, these sideways consolidations, there's all different types of consolidations, and we go through those types in the deep dives as well, and find the ones that can move, make profit from them, and not only that, but offer the best reward to risk ratios, meaning that if we're putting up $1, right, so we're risking $1, I'm looking to make potentially $3 on that $1 trade. Ideally, a lot more than that. $3. Sometimes trades will have $5. Sometimes they'll have $10. Like a Tesla, like a GSX, like NetEase, like so many that have recently broken out. It's really incredible, the market that we're in. But that's what I go through on these deep dive sessions every Saturday. Click the link down below in the description. If you're watching this on Instagram or somewhere else, click the link in my bio. I always put the link to the latest event in my bio. And come join it, check it out, see what it's all about. Whatever questions that you have, drop comments down below, and thank you for watching this video. I truly appreciate it. I love connecting with you guys, with all you traders. I love seeing people excel in the market, and I want to do everything that I possibly can to make sure that you are successful on your journey. So thanks again for watching, and I'll see you again in the next video. Take care, much love. Peace out.